Okay, time now for a look at the day's top business news. And we're going to start in the German city of Hanover, where the world's largest industrial trade fair opens its doors this Monday. To tell us more about that and indeed the other business news, we're joined on set by business editor Brian Quinn. Brian.
Hello, Eve. That's right. 6,500 exhibitors from some 75 countries. Around 220,000 visitors expected over the week-long trade fair on the program this year. Advances and innovations in the fields of artificial intelligence, robotics, and above all, 5G networks. Angela Merkel was on hand to ring in the event Sunday evening with the Prime Minister of conference partner country Sweden. The German Chancellor calling for an alliance of European industries to boost competitiveness, taking aim in particular at China. Here's Merkel.
I think that Sweden and Germany are not only able to work together in industry and economy, we're also close politically, and we will develop and support artificial intelligence and develop new methods as part of the European domestic market.
Next, ride-sharing app Lyft launched its public stock offering Friday with a market value of over $24 billion. That without ever turning a profit. Lyft's IPO is just the latest among the so-called tech unicorns, private venture capital-backed firms worth over $1 billion. But with a growing list of such unicorns preparing their own IPOs, many are wondering if the loss-making, market-dominating firms could be a bubble ready to pop. Emerald Maxwell takes a closer look.
It was a triumphant market debut for Lyft. The ride-sharing app listed its shares on the Nasdaq Stock Exchange at $72 each, giving it a market value of just over $24 billion. Not bad for a company that has yet to turn a profit. And many others are waiting in the wings to float this year. Tech companies like Lyft's bigger competitor Uber, digital scrapbook Pinterest, and home-sharing service Airbnb.
It's a lot of household names which always draw a lot of attention, but they're highly valued household names. Again, the aggregate value of companies that are prepared to go IPO is over $100 billion. That's $100 billion of high growth value coming to markets.
There are now more than 330 unicorns, private companies valued at over $1 billion. Many are feeling the pressure to justify their valuations before the next recession. But as they gear up for their IPOs, most are still reporting losses. Despite its $24 billion valuation, Lyft lost $911 million last year, while Uber is expected to be valued at $120 billion when it goes public, the largest IPO of a US company in history, and yet it lost $1.8 billion in 2018. Those figures don't seem to be putting off investors, but unicorns like Snap could provide a cautionary tale. Snapchat's parent company also hadn't made a profit when it floated 2 years ago, and its shares have since tumbled more than 60% from its first-day peak.
That's France 24's Emerald Maxwell. Next, Japan is marking major changes to its long closed-off labor market. With an aging native population and near full employment, the country is opening its doors to foreign workers to face a mounting national labor shortage. 2 new long-term visas are now available, one for 5 years with no family accompaniment allowed, and one indefinite-length visa with family for highly skilled employees. The new program will remain strictly regulated, limited to just over 345,000 workers in 14 sectors, including nursing, construction, and farming. Well, turning now to the markets, significant gains across major Asian indexes on Monday as Chinese factory activity rose in March after 3 straight months of declines. The Nikkei in Tokyo closing up around 1.4%, helped along by a weakening yen. Chinese indexes boosted also by investor optimism over U.S.-China trade talks set to continue this week in Washington. Shanghai closing up around 2.6%, Hong Kong up around 1.6%. The Kospi in Seoul closing up around 1.33%. European indexes opening in positive territory as well on that strong Chinese data. London up around 0.5%. The CAC 40 and the Frankfurt DAX each up around 0.8% at the open. Well, finally, for business, Facebook chief Mark Zuckerberg is calling for increased government regulation of the internet. In an open letter published Saturday in the Washington Post, Zuckerberg called for new legislation in 4 categories: harmful content, election integrity, privacy, and data portability, with a, quote, common global framework to standardize regulations across international borders. That letter comes as Facebook is facing official investigations and heavy fines over a number of issues, from the Cambridge Analytica data sharing scandal over the 2016 U.S. election to alleged discrimination in housing advertisements. A lot of those investigations falling along the same lines as the category Zuckerberg is calling for regulation eve. We'll see if those regulators think that letter is perhaps a bit too little too late.
Maybe, perhaps. So Brian, thanks a lot for that business update. Brian Quinn there with us.